Malaysia's leading convenience store chain, 7-Eleven, has gone public in May last year, marking it the biggest retail listing in the country to date. Now, with the bulk of its gross proceeds being set aside for capital expenditure, is 7-Eleven Malaysia's aggressive growth plans on track? I caught up with CEO Gary Brown to find out how the company's expansion efforts have been taking place since its listing. Seven-Eleven Malaysia has allocated 185 million ringgit in its IPO gross proceeds for capital expenditure. To date, 73 million ringgit has been spent. Could you update us on 7-Eleven's expansion plans since it was listed, as well as plans ahead with the remaining capex?
Sure. The capex that was allocated was for new stores, and we opened 213 new stores in 2014. We also refurbished 201 stores. On top of that, the proceeds were allocated for a new IT system, and we're 3/4 of the way through that. That will come fully on board by the third quarter of 2015. And then also there were proceeds ring-fenced for a new distribution centre. We're currently evaluating that, whether it should be a chilled or a frozen facility, but the proceeds are ring-fenced, and so we're not part of the dividend payout.
So all these plans set out during the IPO, are they on target?
Yeah, very much so, very much so. We opened all of the stores that we said we would. We refurbished. The IT project, as I say, is 3/4 of the way there. I guess the only one is the central distribution centre. Originally we were looking at a dry goods warehouse, but there's adequate third-party dry goods warehousing available. Given our expansion into fresh food and beverage, we're now considering, would it be better as a chilled and frozen facility with a small central kitchen rather than just a dry goods.
To recap, this is the third time billionaire tycoon Tan Sri Vincent Tan is relisting 7-Eleven after going public in 2001, but was then delisted in 2007. Then, under its parent unit, Berjaya Retail Bhd, was listed in 2010 before taken private again in 2011. Berjaya Retail now owns 51% of 7-Eleven Malaysia. Last year, 7-Eleven Malaysia reported a double-digit growth in performance, with profit growth overtaking top-line growth. For FY14, revenue grew at 14%, while net profit grew at 43%. Margins have been rising as well. Are you eyeing further margin expansion, and what will this be driven by?
Okay, I think further margin expansion is really going to depend on mix of product. Clearly, with the advent of GST, it's not feasible to expand profit margin per se because of the anti-profiteering legislation, which we fully respect. But therefore, it's likely to come through mix as we increase our higher margin categories.
Okay. What are the higher margin categories that you mentioned?
Fresh food and beverage. Our proprietary beverage is a higher margin category. Health and beauty products are higher margin categories. So they're the key focus in terms of expanding the margins.
What's your outlook on the sector, the retail sector, as well as convenience store segments this year? How is it looking like for consumer sentiments?
No one's too sure yet as to what's going to be the outcome of the GST. So I would say there's a little bit of negative consumer sentiment. But as a convenience store, we're less impacted, in my opinion, because we're not a pantry fill. You don't come to us to buy a carton of something, you come to us to buy impulse and one unit. So therefore we're less impacted by the GST. So I foresee convenience sector will continue to grow. The overall market, retail FMCG, was relatively flat in 2014, but as you correctly point out, we grew nearly 14%. So we certainly outgrew the market, and that's our plan going forward as well.
How is 7-Eleven Malaysia looking to end FY15? Would profit growth continue to be bigger than its revenue growth?
I can't really give you too many forecasts. We are looking to maintain strong momentum of growth in both top line, sales line, and clearly in our profit area. We intend to open another 200 new stores, and we intend to refurbish another 200. So that should ensure that the growth momentum can keep going.
7-Eleven Malaysia has secured 8 cornerstone investors during its listing last year. Could you update us on the shareholding of these investors then and now?
Yeah, look, the great news is that our cornerstone investors have been very happy with what's been happening. We declared 100% earnings payout dividend, so they're very happy about that. And really there's been virtually no change in the shareholding of our cornerstone investors. Certainly no significant change.
In the prospectus, the group said that it is targeting a dividend payout ratio of 30 to 50%, but last year it paid out 100%. So what can we expect for FY15 in terms of dividend payouts?
Our dividend policy remains the same, 30 to 50%. But clearly it's our intention, where possible, to return as much funds and cash back to shareholders as we possibly can. The business is very strong in generating cash flow, and that cash flow easily covers our capex. So we would hope to continue to generate higher dividends and return to shareholders.
And that was Gary Brown, CEO of 7-Eleven Malaysia. I'm Wei Lynn, this is the HTV.